You all are having an amazing weekend. Um, been traveling this weekend, so I wasn't active on our community on Friday. But I just landed and the market started dumping. But anyway, um, let me know if there is any audio trouble or you're not hearing me right. This is a new setup that I just came with this morning, but I will have a full blown setup by tomorrow morning. So that's good. But anyway, if there is some audio trouble or anything like that, just let me know in chat so I can probably rectify it right now. But with that, this is going to be a 30-minute call. I will have an education video out this week as well, where today I'll be talking about our seasonality, then the earnings calendar, and then the economic calendar. I'll After that we'll talk about SPY, QQ, QIWM in general, what we are seeing, and then talk about certain trade ideas and setups that are brewing in the market, so that I know I did post out a few swing trade ideas, hedges, and things like that nature, where you can probably make those trades based on the triggers that I just sent you. But other than that, if I do see something else, I'll keep posting it throughout the day. I will be up for the next 16 hours anyway. So I'll probably be posting out more trade ideas. But anyway, without further ado, let me start off with our weekly seasonality. Every week I go over this. This is our weekly seasonality. It is merely a statistic as to how a particular day did in the past. It is not a prediction of the future. Any number above 60 and below 40 is something that I kind of consider a little bit more seriously in the market. So how does this week looks like is this week specifically has been is an OPEX week for March, right? So it starts off pretty strong, looks pretty good with respect to Nasdaq and no, with respect to Dow and S&P. Nasdaq at 57, like it's 57% of the times it was a green day in the past 25 years. So that's essentially what 24 years. But essentially what this statistic is telling you is Dow is going to be a little bit more stronger than Nasdaq going into next week, starting Monday. Tuesday, Nasdaq shows a little bit of a weakness. Wednesday, again, Dow, S&P being a little bit more stronger. Wednesday, Nasdaq and S&P being a little bit more stronger than the Dow. But Thursday, again, Thursday, Friday, Dow seems to be a little bit more stronger in that aspect. So I will be looking out for certain trades around oil, like some of these other transport sectors and things like that, where Dow is going to be a little bit more heavy weighted. We'll go from there, but overall this week Dow seems to be a little bit more stronger than Nasdaq. So if the market is trending lower, we do see some pretty nasty reversals that are happening, and it is bound to happen with the CPI this week, and then you have you have OPEX coming out, consumer sentiment coming out. There's quite a bit of things that are going on. PPI, obviously, there's quite a bit of things that are going on in the market this week. So we'll see what the market kind of gives, but this is how the seasonality kind of looks like. Next, I'll go over the economic calendar. We were talking about, the consumer inflation expectation that comes out tomorrow after the market opens, 1 hour after the market opens, actually. So it's not going to be a huge deal or a big mover per se, but something to keep an eye out for, for how the consumer has been reacting to the inflation numbers. Then we do have CPI, which is usually a very big mover. I'll tell you, if CPI comes in hotter this time around, market is definitely going to tank. I'll come up with the levels that it can tank to and probably give you targets based off it. But CPI, I don't really like it at all. I will not really like it at all if it is hot, because how the Fed has been taking the January CPI was that they started talking about how it's a speed bump in a road. January CPI was actually good. They are expecting a revision of the January CPI, and February should start trending lower back again. And that's how they were trying to soft speak it, and the market really liked that, and it started heading back higher after the big dump that it had after this last CPI reading that came out for January, right? Obviously, January comes in Feb comes in March, so now we have the Feb reading coming out this week on the on 3/12. If it does come hotter, I'm definitely expecting a bigger than expected dump on the on S&P 500, and it might be a little bit more. We might see a little local top at the moment until again the next reading comes in a little softer, or we have revisions of the CPI come in, and that's where market starts to trend back higher going into the elections, right? So a little bit of a dip, a little bit of a correction, 5 to 7% is nothing out of the ordinary. That I would say QQQ probably will go 10% into a correction mode if that happens, and it's not bad. It's going to be good for the long term until 2026 anyway. So when we see a dip, I'll probably sell some pretty good cash secured puts. Currently, the market is so heavily skewed onto the call side that most of the puts are like worthless to even sell them right now. So that's why I'm like staying away. Let fear creep back into the market. That is when I start try to sell puts, try to buy the dips also. I don't really like to position myself in a long term portfolio when there is this euphoria in the market where people are like, oh, you know what, the market never goes down, the market will always go up, things like that. I like positioning myself when people are actually saying S&P 500 is going to zero. That's when I really love it to, when there is that a lot of fear. That is when you know that you want to get into the market into the long term, or average up your positions. I'm not a huge fan of averaging down your long term positions, because averaging down just tells me that I was blatantly wrong the first time around when I bought something. So I don't really do that averaging down. I would really appreciate if I can keep my shares averaging up throughout my investment in a long term basis. So anyway, CPI, that's what my take is. If it comes in hotter, the market is going to absolutely tank. If it comes in line, it's going to be good. Probably market will probably chop for another day or two until we see our OPEX move come out on Friday. Next one is PPI. That is another one that is very interesting. So let me highlight these. So CPI here, PPI, this is another one that really can move the market. And then you have the Michigan consumer sentiment. I know there are a couple more things that I also keep track of on the event time frame, macro event time frame. There is a 10-year and 30-year bond auctions coming out on Wednesday and Thursday. This week, they are during the market hours. They are at 11 wait yeah 11 p.m. PST. So sorry, 11 a.m. PST. So you will see quite a bit of a move there. I'll confirm the time when the auctions come out, 30 minutes before the auctions, because right now I'm a little bit mixed up with the daylight savings kicking in, me coming to India, the time zones are completely messing me up right now. But I will definitely let you know 30 minutes before the open, and then we can go from there. But keep those two events also on watch. They are pretty important, and I don't really look for like 3 months, 6 month, 9 month, and bond auctions, but 30-year and 10-year are very crucial for the to judge the market sentiment, and it can really affect the the small caps in a big way, and we can make some good money on 0-day IWM calls or puts based on how auctions go, because we tend to have like a 5-minute lag before the price action kicks in after the auction. So it'll be pretty good, and I'll keep you posted on that. Next one, coming to this week's earnings, Oracle, and then you have Adobe. These are the only two things that I'm looking for this week. Nothing else really stands out for me. So if Oracle numbers are good, you can have a lot of proxy plays here. You can do MDB. MDB is the best proxy play for Oracle. You can definitely do Snow and DDOG. These are the three stocks that you can definitely play for Oracle's earnings. Next one is Adobe. Adobe, I think they will be affected by the top line because of how we are seeing some rollouts from OpenAI, and their conference call is going to be a little bit more important than the numbers that come out, because if they reiterate saying that, oh, we are not really concerned, this is our potential growth, AI has a significant impact on our business, and we are growing our enterprise at this particular scale and things like that, I think Adobe is going to do really, really well in that front. So and we did see some the 600 calls being bought up on Adobe as well. So you can definitely anticipate some kind of a nice bounce coming out of Adobe here. So keep an eye out for those two, Oracle and Adobe. Adobe, I really don't have any trade ideas per se, but the closer to the earnings we get to, I'll probably post out some calendar spreads or any kind of calls or put positions that are being taken on the flow. The flow on Adobe is pretty low, so it'll be easy to capture if anybody is really getting into those positions and go from there. There are a few the retail names that you can probably look for. Dick's Sporting Goods, Nike is something that also can move based off that. You can keep an eye out for that. Then you have also, is there Lulu this week? Let me see. Lulu is another one that goes up every time regardless, right? Like this is one of the stocks, one of those stocks that I keep talking about for the weeklies, for the earnings, like CMG, Lulu, BKNG, CrowdStrike. These are the ones that always go up. Snow is another one that always goes down. So like that's how they work. I don't know why that happens, but that's how they work all the time. I don't think Lulu is here. I thought I saw it, but okay, that's fine. But these are the ones that I'm looking out for this week. Not really a whole lot, but Oracle is one you can definitely look out for on this front. Anyway. Now let me quickly go up into the SPY weekly chart here. You see that there is that nice dragonfly doji that has formed on SPY, which basically tells you that there's a lot of push-pull action that's going on between the bulls and the bears. And coming off at the top of the nice rally here shows a little bit of a strength loss from the bulls without closing it off at the highs of the week. And something that has been a little bit more alarming to me is this bear volume. I would say the volume has really increased with this on Friday with the drop, and you can see that there is some exits going on. If you look for these bounces, they are pretty low on volume, and then the exits that we are seeing here, with these bearish candles that we are seeing, they definitely are showing some signs of bears trying to step it up, but then not completely having that follow through. So let me quickly go into the 65-minute time frame. Obviously, the bears don't really have much, right? Like they like if you zoom out, where are any bear gaps that are open? There are absolutely none, right? So bears really don't have anything yet. I mean, I wouldn't say they have any ammo at all, but this is something that I was talking about on on when was this? Before I was leaving. If we did a nice little gap down of 0.5%, that would have triggered an island top. kind of scenario, right? That this would become an island top, and then that would give the bears the ammo that they needed, and then they can clearly move the price down to 505, 503, 500, right? But then that really did not happen. We gapped up, and then we chunked right back higher, going into the Friday session as well, where we hit that 518 target. But again, bears again have a chance this time, right? This time, if they can gap it under by 0.4% tomorrow on Monday, again they will actually, it's not 0.4%, right? Like if they can go somewhere up here, like around 0.15, 0.2 to 0.25, they can really create that island top, where this portion here, right, like this portion here becomes an island top, and that kind of can trigger a move down, a very swift move down. If they can keep that island top open, that'll definitely take out this bull gap. That will also make sure that the old island gap that got opened gets filled as well, which comes down to almost to 498 and under, right? So that would be our target. If we see that island top being formed here on SPY, this region here, 503 to 498, that region becomes vulnerable, and obviously you do have quite a bit of support at 505, right? Like you see this one here. There's quite a bit of support here at 505.40, and then there's quite a bit of support here at 508.50 with the bull gap right there. So if you want to play level to level, like don't want to swing through for April hedges and things like that, I just posted, you can definitely go for 315 or puts or something higher, some other expiries for the next couple of weeks to target 508.50 and 505. Right, so these are your targets to the lower side. To the upper side, if you are able to see a break and close above 505, 504.50, 505, you can probably see a retest of 518 again. Probably will be looking for some patterns, somewhere around, trying to see if there is some kind of a the pattern should be this way. This is a double top that can form, maybe, I don't know, really kind of envisioning it right now, hallucinating it right now. But anything over 504.50, 505, 514.50, 515, we can probably see a move towards 518 to 520 again, which gets opened up, and we can expect a new all-time high, like we have been making one every single week, right? So we'll see what happens there. But if we right now, currently, the way I see it, 512 was lost on Friday. That candle was really bad looking on Friday as well, right now, right? Like these are some heavy selling candles as well. Like if you can see these candles here, these are pretty big heavy selling candles as well. So I do think there is a possibility of filling this bull gap here on Monday. But if at all there is a island top that is formed, that will definitely trigger a bigger sizable move to the downside towards 505, and you have to stay hedged. QQQ is a better form of hedge right now at this moment. I'll go over that why when I go over QQQ, but look for these levels, right? 514.50 to the upside, 512 is the chop zone. Anything gapping under the bull gap, this bull gap here that is open, that I'm showing you, any gap under this bull gap that I'm showing you, that will definitely trigger an island top and will go a little bit more bearish tilt there, where we can probably look for a target of this island gap to be completely filled, right? So I'm not going to talk about S&P going to 450, 480, 475, 400 or zero. Obviously, that is not how I trade. I like to trade my levels from level to level. If you are looking for that hedge, obviously, if you see that island top that is being formed, you can go after April or May SPY puts, or QQQ puts that I posted for the hedge. Like we'll see what happens then. But if you are going for a little lower expiry, like a closer expiry, where 315 or something into next week, you would want to look for something closer to 508 or 510 for your hedges, because it's too close, and there are island bull caps that are open still. Bears really don't have as much ammo to showcase for what they're trying to do. But if there is a reversal, you'll definitely be paid really well. But I would definitely go a little bit smaller size than going out for April put swings. But that's mostly how I kind of trade. So you want to see, you want to look for that. Here's QQQ. Very quickly, I want to talk to you about this bearish divergence that I'm starting to see. We are seeing that, very big bearish divergence that is happening on QQQ. Yes, we are definitely at the overbought sentiment, but then we are seeing that nice little bearish divergence. This has, I mean, the daily bearish divergence has been going on for quite some time. But I am a little bit more interested in QQQ because it's getting close. This RSI is getting closer to that 50 line, midpoint line. Anything under the 50 line, I think bears can step it up. Even on the weekly time frame, you are beginning to see that bearish divergence that is happening on QQQ. So when I last saw this kind of a bearish divergence on QQQ, I did see that there was a 10% correction on QQQ, and this was a very bad reversal that happened on QQQ, where it also lost this 440 level. As long as that QQQ stays under 440, I think that 434 comes in very, very fast here. So if you want to go after 315 or 322, right? Like 322 puts or something like that on for QQQ towards 435 or 430. I wouldn't be surprised there if we get 430 pretty fast in like a week or week and a half. So be aware of that. QQQ is a little bit more bearish per se. When you look at the chart, look at that heavy selling that's happening on QQQ when there is selling. So when there is buying, when the move is going up, this is something that you want to see in the market, right? Like you have increasing volumes here, right? Look at this volume here when we were trying to go up. Right, so you want to see something like that, and when we are chopping around on a sideways basis, and you are seeing these volume patterns, right, where the selling is pretty heavy than the buyers than the pop-up days, like when you had this kind of a candle. It kind of tells you that volume patterns are signaling a little bit of a bearish tilt towards how the market can move in a very short term. I'm not talking about long-term picture here. I'm basically talking about a couple of weeks out, maybe a month. That's mostly it, right? Like I'm not talking about a year or 2026 or 2028. I'm just talking about a month to a few weeks to a month time frame. So I'm a little bit more bearish on QQQ than SPX, and the statistics that we just talked about on the seasonality front also kind of shows you that Dow gets a little bit more stronger, so there will be a rotation into the defensive sectors, but then QQQ or growth will start to fizzle, or there will be a correction mode that can happen, and S&P can probably remain a little down to flat kind of scenario, goes down about 5 to 7%, but then QQQ can go down about 10 to 12% in that aspect, right? So keep that in mind. These are the levels that I'm looking for: 440, 443, 446 to the upside. If 440 is not reclaimed, 434, 430 are the levels that we can see to the downside pretty fast. A few months out, probably 425, 420 are the levels that you can see in the market right now. Something else that I wanted to check just now while I was talking is, where is our island gaps that are still open? Here you go. So if we do see some kind of an island top kind of scenario here, also there's this huge gap that's open still until 425. Very thin structure here as well. So if we do break down under 434, which is the level that I was talking about, is that it? Yeah, 434. So if we do drop under 434, there's a very good chance that we fill this bull gap completely towards 425. So I just feel QQQ is a better hedge here than SPY or SPX. So that's the reason why I posted that hedge trade as well into April. So keep an eye out for that on QQQ. Next one is, I want to talk about a little bit about IWM before I go into the trade ideas for this week or chart ideas for this week. We are seeing that a nice little move here on IWM based on the 10-year and 30-year bond auctions that we see. We probably will see a move to 212 on IWM with an initial retest of 205 again. If we do, this is a nice little wedge that it has formed and finally has broken out. I'm not really interested in the trade. If we break and close under this trend line, this upper trend line here, and under 205, obviously, I won't be interested in trading this to the upside anymore. But as long as 205 is held, I would love to play a bounce of this trend line here and 205, and like probably get those 0-day pops to, like, when IWM moves on a 0-day, it pays you really well. I mean, it pays you better than SPX in general, and I definitely would want to play that bounce if we do see some kind of a good data come off the 10-year and 30-year bond auction. So keep an eye out for these levels here. 205 is the level that I'm looking out for this week. 209, 212 are the levels to the upside. Anything under 205, I'm not really interested in playing the bounce trades per se, or I'm not really going to be bullish on IWM at that point. So that's mostly about the indices this week. Now, let me quickly go over what I'm seeing on certain stocks here. First one is AMD. Very nice reject of 227. I know I came back on Friday. We were talking about 250 puts, 205 puts, etc., etc. I think this is a nice shooting star that we have formed here on AMD. Not a lot of structure here under 208.50. Falling off under 205, we can quickly see 198 and 192, and probably a retest of 185 in the next few weeks on AMD. That is quite possible. Of anything break and close about 215, I wouldn't really like to play it to the downside. But there is that big news around China, and there are a couple of downgrades on AMD. Obviously there is an upgrade as well, but like someone calling it, I think CFRA was the one that was calling them mini Nvidia. I don't think they're mini Nvidia, but anyway, it really doesn't matter what I think. We just trade the price, right? So I mean, if 205 is broken, I think 198, 192 is what are the targets to the downside. But anything to the upside, 215 break and close, is something that I would not be interested in playing to the downside. And 230 kind of gets opened up again as a price target. So keep an eye out for that. 234 is the new level that I have there on AMD. So if we do break above 215, that's something that you want to look for. The flow started to get a little bit more bearish after on Friday, like I was talking to you about AMD, Nvidia, SMCI, ARMM. These are the ones that were getting some decent put flows coming into this week. So keep an eye out for those stocks there to the downside. So a nice shooting star setup here. What is a shooting star? It's a reversal pattern candlestick where you see that on an uptrend, like how we are seeing right now with the body of the candle being the wick of the candle being twice the body of the candle, just like how you are seeing here. So any confirmation to the, obviously all these reversal patterns or candlesticks need another candle for confirmation, which is basically on the daily time frame. So you have to probably wait for Monday to give you a confirmation. But like we trade the lower time frames when we are doing the weekly contracts as well. So I'll keep you guys posted as to what I'm seeing on AMD, and we'll probably play some puts on Monday or next week. And I did post out a swing trade. I did post out a weekly trade idea as well on AMD. So keep an eye out for that. Next one is ARM. This is not a good wedge setup that I have here. It's pretty much forced. But we did break under that 135 barrier. We closed right under it. We have the lockup expiry, and if you all remember, in 2021, 22, actually 21 is when we played Rivian at 160. At 160, if you all remember, we took those puts after the lockup, and and look at where Rivian is right now, right? So I think that there is a similar move that can happen on ARM again, where we can probably see a move down to the 80s, is what I'm thinking. And obviously it did break down. I did post out the weekly trade idea as well, where I think there's a retest of 123 to 117 again on ARM. So keep an eye out for that on that this week, and we'll try to snipe it to the downside on those puts on ARM with the lockup expiry on the 12th. So that's another trade idea. Next one is Boeing. Boeing is the first time. This is one of the worst, and it's a terrible stock to trade. I'll tell you that, right? It's not very easy to trade this on the weeklies, right? But I've been talking to you about Boeing for quite some time, as to how bearish it looks on the chart. Finally, I think we did get the break and close under the 200 level on the daily time frame. I know we did touch 197.50 a couple of times, but then we definitely closed above 200 after that. On last week on Friday, we closed under 200. This was the first time in a long time that it has happened, and any break under 197.50 on the weekly time frame, it goes down to 190. Right. My target on Boeing still lies somewhere around the 176 to 167 price range. If 197 breaks, I'll tell you, if 197 breaks, there's very nice chance that Boeing goes right down to 190 in a matter of week. The premiums on Boeing move just like Goldman Sachs. When there is a move, they get inflated really, really fast, and you can get some good price movement very quickly on Boeing to get those home runs per se. So keep an eye out for that on Boeing. Next one is let's see. I did have a couple more which I was doing some analysis on. Let me quickly go over Tesla. We kind of nailed this one on into Thursday, I guess, where we took a put swing. We sold it at 120% or so, and after that I boarded the flight, so did not do much per se. I did see some call flow on Tesla at around 180s on Friday. So if we do see a move above 185, probably do not want to play or place be in puts until and unless you see some kind of a bearish pattern come up again. But as long as it stays under 180, I think the target here on Tesla will be 167. The other part that also kind of tells me there is a possibility that we can see a bounce is we are seeing some tapered of volume on drop here on Tesla. We can probably see a bounce. That's partly the reason why I did not swing some puts on Tesla last week into this week. But we'll see. There is some call flow that's happening. So 177.50 and 185. This is some TA that I was doing over the weekend. But like, I don't have a trade idea right now, but if I do see something on the flow to the upside, we'll probably try to play it. But the target still remains at 167 currently, as long as we are staying under 180 on Tesla on the daily time frame. So keep an eye out for that on Tesla. Let me go over SMCI Nvidia as well, just because, like, we trade them a lot. We can do really well on SMCI. Anyway, SMCI 1080, if that level is lost, actually I can probably update this to 1090, right? uh, there's quite a bit of, 1090 is where we can probably update this level to. I'll change it later. But then if we are seeing that drop off under 1100, we'll probably play some 1000 puts on SMCI. We might probably see a retest of this trend line here, is what I'm thinking. We probably might see a retest of this trend line here. That is essentially what I'm thinking. And if the break under the trend line, I would be a little bit more bearish and swing some puts. But breaking under 1100 is something that I'll be looking out for. Wait, why is this 1111 and 1140? Maybe it's an after hour movement that was captured here. But breaking under this trend line is something that I would be definitely interested in. Yeah, we'll see. I am more skewed towards the puts on SMCI than calls here. We will see what to do. Like Beatbox was mentioning the other about this evening. Why are the premiums on ARM, SMCI, Nvidia, and most of the semis more expensive on the call side than the put side? This usually happens when like MMs are, like, market manipulators are expecting a move up than a move down. And I take that more seriously when we are seeing some kind of a breakout kind of a move. Right now it's a euphoria kind of a move. Everybody is buying the dip, everybody is programmed to buy the dip, and that's what the market does. It programs everyone to, like, buy the dip, buy the dip, buy the dip, and when the lights get turned off, everybody's trying to buy the dip, and they lose all the money that they have made with that mindset. And then they start getting emotional and lose more and more and more. That's essentially how the market operates, and I think a lot of people are in that mode of buy the dip, and market manipulators know that, and they are inflating the call side currently, and calls are definitely more expensive than put. So I would say your risk reward right now is definitely skewed towards the put side, where the movement towards the downside, a smaller movement towards the downside, you get a bigger return on your puts than the movement to the upside, to get a movement on your call. So just something to remember, like 1100 is the level, 1090, 1100 is the level that I'll be looking out for on SMCI. If 1170 is broken to the upside and we break and close about 1170, I would be a little bit more cautious to the downside. I'll probably wait out to see what to do, more towards the the second half of the week than trying to snipe out something on SMCI earlier in the week. I'll also go over Nvidia, like I was saying. I didn't have any levels on Friday. Oh, that's interesting. 975 is what I posted, right, as a target. We almost hit that 975. That's interesting. But anyway, we closed under 880. There is a chance that we see a retest of 800. That's pretty nasty volume there. But anyway, I do think that that's a bad bearish close, where we are engulfing two bullish candles, bullish green candles, very thin structure here all the way until 800. A little bit of a pullback doesn't hurt Nvidia. It has had an amazing run, the first level here is 800, and the level under is 740. Both are possible on a downside move here on Nvidia, and a nice little correction does not hurt anyone on the stock. But these are something that I'm looking out for. I think I will go over a few more charts over the weekend. Obviously, before the market open. I'll post out these trade ideas as well. And we'll go from there. I hope the audio is pretty good. If there is no complaints, I'll probably just stick with what I have right now. But otherwise, business as usual from next week, and let's kill it and make some good money. Thanks a lot. Have a good rest of your weekend. Bye.